The single biggest thing Wall Street turned into a digital token this year wasn't gold, it wasn't stocks, it wasn't a treasury bond, it was home equity. Around $20 billion dollars of it. Not the houses, the equity, the part you own, the part you spent 30 years paying down. They took that, wrapped it in code, and turned it into something that trades on a screen like a share of stock. Bought, sold, sliced, bundled, passed around a market you will never see. And here's the part almost nobody has connected. Of every real world asset that's been turned into one of these tokens, every tokenized bond, every tokenized fund, every tokenized dollar, the single largest one on the entire market is a pile of American home equity. It's not close. It's the biggest one there is. If you own a home, sit with that for a second. The thing you were told was your safest asset, the foundation under your whole retirement, is now the raw material for a financial product with somebody else's name on it. I'm going to walk you through exactly how this happened, who's doing it, and what it quietly does to the money you've saved. But I want to plant one thing right now, because it's the whole point of this video. In this entire wave of turning everything you own into digital tokens, there is exactly one asset on Earth they physically cannot do this to. One. They can't wrap it, they can't water it down, they can't print more of it and hand you the copy. By the end, you're going to understand why that one exception is the most important financial fact of the next 10 years, and why the smartest money on Wall Street is quietly moving toward it while they sell you the rest. Let's open the door. Start with the word because they count on you not understanding it. Tokenized. When somebody says an asset has been tokenized, all it means is this. They took something that used to live on paper, a loan, a bond, a share, and turned it into a digital token that can be traded instantly on a blockchain. Think of it like this. For 100 years, if you wanted to buy a piece of a loan, you needed a lawyer, a filing cabinet, and 3 days. Tokenizing it is putting that same loan on a screen where it changes hands in 3 seconds, any hour of any day, no filing cabinet required. Sounds like progress. Sometimes it is. But watch what they chose to tokenize first. As of this month, the total value of these real-world assets living on chain crossed roughly $34.5 billion. And the biggest single slice of that, over 20 billion of it, is a home equity token issued by a company called Figure. Figure isn't a fringe crypto outfit run out of somebody's basement, it's a public company. It listed on the NASDAQ at a valuation north of $5 billion. dollars. And its entire business model is this. It lends against the equity in people's homes. HELOCs, home equity lines of credit, and then it turns those loans into digital tokens and sells them to investors. Let me put that on the kitchen table. Imagine every home equity loan in your zip code, your neighbor's kitchen remodel, the guy down the street who borrowed against his house to cover medical bills, somebody else pulling cash out for a kid's tuition. Now imagine all of those loans scooped into one big digital bucket, chopped into thousands of little tradable slices, and sold to strangers all over the world who now collect the interest your neighbors are paying. That's not a prediction, that's the 20 billion. That's what's already happened, while the evening news was busy with other things. And this is not some experiment on the edge of finance. This is the plan at the very center of it. Because 3 days before I sat down to make this, the same story was breaking one floor up. The largest asset manager on the planet, BlackRock, reported it now runs more than $15 trillion. dollars. And its chairman, Larry Fink, has been saying the quiet part in writing. In his 2026 letter to investors, he put it about as plainly as a man in his position ever will. Every stock, every bond, every fund, every asset can be tokenized. Every asset. He's not hiding it, he's advertising it. It's the strategy, printed on company letterhead. Now think back to what that same crowd said about Bitcoin a few years ago. Bitcoin was a scam. Bitcoin was rat poison. Bitcoin was going to zero. Then they built the Bitcoin exchange traded funds, they took the custody fees, and they told you Bitcoin was step one. This, turning your house, your bonds, your savings into tokens they issue and control, this is step two. Same people, same machine, bigger prize. And here's the first thing it costs you before we go 1 inch further. The moment your home equity becomes a token on somebody's platform, the thing you own stops being simply yours. It becomes a line in someone else's inventory. You still make the payment, you still carry the risk, but the asset now answers to a company, a platform, and an issuer, none of whom are you. Hold on to that word, issuer. We're coming back to it, and it's going to explain everything, including why Bitcoin is built the way it is. Quick thing before we go deeper. Somewhere in this video, you're going to start wondering how much of your own net worth is sitting in assets somebody else can reprice like this. I built a 2-minute tool that answers exactly that, shows you the number in plain dollars. I'll tell you where to find it in a bit. For now, keep watching, because you can't fix what you can't see. Let me tell you why turning your house into a tradable token is not the harmless convenience they're selling. We've watched this exact movie before, and it did not end with you getting rich. Rewind to the early 2000s. Wall Street looked at the American mortgage, the most boring, solid, predictable thing in finance, and had an idea. What if we take thousands of these home loans, bundle them together, slice them into pieces, and sell those pieces to investors around the world as safe, high-grade securities? They called them mortgage-backed securities. The ratings agencies stamped them AAA. Everybody got paid. The lender, the banker, the rater, the salesman. And then the homeowners at the bottom of that pile started to wobble. And the whole thing came down on top of the entire global economy. You remember how it got divided up. The people who built the machine got the bailout. The people whose houses were in the machine got the foreclosure notice. Now look at what's happening today with fresh eyes. They are taking the equity in your home, the piece you actually own, bundling it, slicing it, tokenizing it, and selling the pieces to investors around the world. It is the same machine. The only thing that's changed is the technology got faster and the paperwork turned into code. In 2008, it took days for that market to move. A tokenized version moves in seconds, 24 hours a day, 7 days a week, with no closing bell to slow a panic down. We didn't fix the thing that broke the system last time. We put it on rails and greased them. Here's the mechanism underneath it. And this is the part they really don't want you thinking about. There's an old line about McDonald's. They're not really in the burger business, they're in the real estate business. The burgers just pay the rent. The real money was never the thing you could see. It was the financial layer sitting on top of it. That's what's being done to your house. You think of your home as a place to live and a nest egg to retire on. But to this machine, your house is a financial layer, a stream of payments, and a chunk of collateral that can be borrowed against, packaged, and sold over and over again. You get the part that costs money. The mortgage, the taxes, the roof that leaks. They get the part that makes money. The tradable, income-producing tokens stamped out of your equity. You hold the anchor. They hold the sail. And when your equity is floating around out there as a token, something subtle and dangerous happens to your number, the number you're counting on for retirement. Its price is no longer set by your quiet street and your local market. It gets set by whoever's trading the token at 3 in the morning on the other side of the world. When their market seizes up, and financial markets always, eventually seize up, the value of the thing under your feet can get repriced by a panic you had nothing to do with and never saw coming. Let me make it personal, because this is the whole game. The equity in your home is very likely the biggest single piece of wealth you've built in your life. It's supposed to be the calm part of your portfolio, the boring part, the part that lets you sleep at night. Tokenize it, and you've quietly strapped the calmest thing you own to the most hysterical market on earth. And notice who's first through this door. It isn't the mansion on the hill. It's ordinary home equity, regular people's houses, leading the entire tokenized market. The wealth of the guy who did everything right, who paid his mortgage for 3 decades, is the raw material they reached for first. That's not an accident. That's where the money is. That's the theft. It's not that they steal the house, it's that they turn your safest asset into someone else's casino chip and leave you holding the risk while they collect the yield. Your money, quietly repriced by strangers. And it does not stop at your house. Because once you see the pattern, you see it's pointed at everything you own. Here's where it gets bigger than your mortgage. Home equity is just the biggest domino so far. The same machine is coming for everything else on your statement. By one count this year, tokenized stocks are growing something like 40 times faster than tokenized government bonds. They're tokenizing funds. They're tokenizing private credit. They're tokenizing the dollar itself. That's what a stablecoin is, a tokenized dollar. Larry Fink already told you the target out loud, every asset. So picture the near future they're building. Your brokerage account, your bonds, your cash, the equity in your home, all of it converted into digital tokens, all of it trading on their rails, all of it wonderfully fast and convenient. And now I'm going to hand you the one question that unlocks this entire video. It's simple. Who is allowed to make more of them? Because that's the thing hiding underneath every one of these shiny new tokens. Every single one has an issuer, a person, a company, an institution standing behind it with the power to create more. Walk down the line with me. A tokenized share of your home equity? Figure, or whoever holds the platform, can issue more of them. A tokenized dollar? A stablecoin? The issuer can mint more with a keystroke. That is literally what the business is. A tokenized treasury bond? The government can option another $1 trillion of those any Tuesday it likes. A tokenized fund from BlackRock? BlackRock can create more shares whenever there's demand. A tokenized stock? The company can dilute you with a new offering next quarter. Every single one has a man behind it who can make more of it. Here's the kitchen table version. Imagine you buy a limited edition print, numbered, signed, feels valuable. Except the guy who sold it to you quietly kept the printing plate in the back room. However rare he told you it was, he can walk into that back room any night and run off 1,000 more. Your limited edition is only as limited as his honesty and his need for cash. That is what you own when you own a token with an issuer. You don't own a fixed thing. You own a promise from whoever holds the plate. And history is brutally clear on what happens to those promises when the people holding the plate get desperate. They print, they dilute, they change the terms. They always have. The dollar in your pocket has lost the large majority of its purchasing power over the last few decades for exactly this reason. Somebody had the plate, and somebody always uses it. So when they offer you this beautiful tokenized future where everything you own trades in an instant, understand what they're really offering. Every exit they're building for you has a landlord. Every asset is a claim. Every claim has an issuer. And every issuer, sooner or later, when the pressure is high enough, reaches for the plate. Which brings us finally to the one exception. Because there is exactly one asset in this entire digital repricing that has no issuer at all. No plate, no backroom, no man. It's Bitcoin. And I need to show you why, because the reason is the entire point. Right here is the moment that tool I mentioned actually matters. Go to timtalksfinance.com/members. It's free, no credit card. There's a 2-minute money quiz that shows you in real dollars how much of what you've saved is sitting in assets with an issuer who can water them down. And it hands you one move worth considering for your situation. It's the same dashboard I use to spot these stories. The free account gets you the quiz, the live numbers, and your net worth tracked on any device. I built it so you don't have to figure this out alone. Now, why Bitcoin is the exception? In the whole tokenized world they're building, Bitcoin is the one asset with nobody standing behind it. No figure, no BlackRock, no Treasury, no company, no committee, no CEO, no server farm, no man in a back room with a printing plate. Just a fixed rule that nobody can change. 21 million. That's all the Bitcoin there will ever be. Ever. Now stay with me, because the point is not the one you might expect. I'm not here to talk about Bitcoin's price. I don't care what Bitcoin is trading at the day you watch this. I'm talking about the one property that makes Bitcoin different in kind from everything else on that tokenized menu. Everything else in this video is a token with an issuer. Bitcoin is the one token without one. That is not a small distinction. That is the entire distinction. And here's how Bitcoin actually holds that line, because you should never take this on faith. That 21 million cap isn't a promise a company made. It's enforced by tens of thousands of independent computers all over the world, run by ordinary people, each one checking every transaction against the same rulebook. If any single one of them tried to create extra Bitcoin out of thin air, all the others would reject it instantly, the way a poker table would throw out a player who suddenly tried to pull a fifth ace from his sleeve. There's no headquarters to lean on, no number to call, no Larry Fink who can vote to print more. To change Bitcoin's supply, you'd have to convince nearly everyone on Earth running it to agree to dilute themselves. And no one has ever done that, because no one holding a scarce thing volunteers to make it common. And understand what a breakthrough that is, because it runs against your instincts. Everything digital in your entire experience is infinitely copyable. A photo, a song, a document, you can duplicate it a million times at zero cost, perfectly. So when people hear digital money, their gut says, of course they can make more of it. It's just computer code. Bitcoin is the first digital thing in human history where that's false. It's digital and yet genuinely scarce, copyable in theory, impossible in practice, because the network refuses the copy. Nobody had ever done that before Bitcoin. That's the actual invention, not the price, not the trading. The fact that, for the first time, you can hold something digital that behaves like a rare physical object, finite, and not subject to anyone's honesty or anyone's need for cash. Think about what your house was supposed to be. It was supposed to be yours, solid, something nobody could print more of and hand you the watered down copy. That's why generations of Americans put their life savings into a home instead of a bank account, because you can't run a photocopier on a house. Except now they've figured out how to. They can tokenize your home equity, issue more claims against the same bricks, and reprice it out from under you. The one thing your house was supposed to protect you from, they've engineered right back in. Bitcoin does what your house was promised to do: hold value that nobody can dilute, and, unlike your house, that promise can't be broken, because there's no issuer left to break it. Now, I can hear the sharp ones already. Come on, Tim. If they can tokenize everything, they'll just tokenize Bitcoin too. And that is exactly the right question. So let me answer it, because it's the most important thing in this whole video. They will try. In fact, they already do it. It's called wrapped Bitcoin, a token on some platform that's supposed to represent a real Bitcoin held somewhere in custody. And the second you hold that wrapper instead of the real thing, guess what you've done? You've handed yourself an issuer again. Now you're trusting the company that holds the coin, the platform that issued the token, the custodian who swears the Bitcoin is really in the vault. That wrapper can be frozen. That custodian can lie. That platform can blow up, and plenty have. The wrapper has all the counterparty risk of everything else in this video. But here's the thing they cannot touch. The wrapper is not the Bitcoin. Underneath the paper claim, the real Bitcoin is still sitting on its own network, 21 million and not one Satoshi more, with no issuer. You can choose to hold that, the actual coin, in your own custody, where no platform stands between you and it. That's the difference between owning a claim on Bitcoin and owning Bitcoin. One has a man behind it, the other has math behind it, and that is the whole game. That's also why, on this channel, it's Bitcoin and only Bitcoin. Not the coin of the week, not the casino, not some token with a founder who can mint another billion on a Sunday. The entire point is the absence of an issuer. The moment there's a company, a founder, a plate, you're right back in the trap they're building with your home equity. There is one asset with no plate. It's Bitcoin. And here's the irony they walked straight into. They spent this whole decade racing to tokenize everything, to turn every asset into a fast, digital, blockchain-settled object. Well, Bitcoin is already that. Bitcoin is already the digital token that moves anywhere on Earth in minutes. It just happens to be the only one where the issuer's chair is empty. They tried to build the perfect digital asset, and a fixed supply one already existed, the one they don't control and can't print. So the choice quietly reorganizes itself in front of the ordinary saver. On one side, a growing pile of tokens, every one of them a claim on somebody, every one of them dilutable, all dressed up as progress. On the other side, Bitcoin, the one digital asset with no issuer, no plate, and a hard cap. I'm not telling you to back up the truck. That's not what this channel does, and anybody yelling buy now is selling you something. There are no certainties here, only probabilities. But I'll tell you which way the probabilities lean, because the math isn't subtle. Every year this machine runs, more of what you own becomes a token somebody can print more of. And Bitcoin is the one exit where nobody can. That gap doesn't shrink over time, it widens. Your money on one side of that line erodes. On the other side, it can't be diluted by decree. So let me hand you the math and step back, because this is your decision, not mine. Right now, today, roughly 58% of every real-world asset that's been tokenized is home equity, the wealth of ordinary homeowners, converted into a product. That's the leading edge. The trend line behind it points one direction. More of your bonds, more of your cash, more of your accounts, more of your home, converted into tokens with an issuer. That's not fear. That's just reading the chart they're drawing in public. So the only question that matters for your money is this. How much of what you've built is sitting in things somebody else can reprice or reissue? And how much of it is in the one thing they can't, which is Bitcoin? You don't have to do anything drastic to answer that. You just have to know the number. Most people have never once added it up. Let me leave you the way I always do, with 2 scenarios and 3 signals, so you can watch this play out with your own eyes instead of taking my word for it. Scenario 1. Tokenization turns out to be just plumbing. The rails get regulated, the convenience is real, life goes on, except every asset you own now has a landlord quietly taking a cut and holding the power to dilute. Slow erosion, the kind you don't feel until you count. In that world, a small position in the one asset with no landlord, Bitcoin, is cheap insurance. Scenario 2. The repricing accelerates. More assets get tokenized, faster, and in the first real panic on those always-on rails, people discover the difference between a token with an issuer and a token without one, the hard way. And Bitcoin, the one with no issuer, gets repriced as the only clean exit in the building. I don't know which one we get. Nobody does. But here are 3 signals to watch, and they're all checkable. You don't need me. Signal 1. That real-world asset total. It just crossed roughly 34 billion. Watch it cross the next big threshold. The faster it climbs, the faster your world is being tokenized. Signal 2. Watch for a major bank to launch a tokenized deposit, your checking account, turned into a token they issue. When a name you bank with does it, step 2 has reached your street. Signal 3. Watch for the first tokenized asset to freeze or fail publicly. The first time regular people can't get their money out of one of these things. That's the moment the word issuer stops being abstract, and the case for Bitcoin stops being theoretical. When you see those, you'll remember this conversation, and you'll understand why Bitcoin, 21 million, fixed, no plate in any back room, was never really about getting rich quick. It was about owning one thing in your life that nobody else can print, water down, or reprice out from under you. Your home was supposed to be that thing. They just turned it into a token. Bitcoin is the one they can't. Do one thing for me this week. Go to timtalksfinance.com/members. Free. No credit card. 2 minutes. Take the money quiz. It'll show you your net worth, how much of it is exposed to exactly what we talked about today, and the one move worth considering for your situation. It's the same macro command center I use to catch these stories before they hit the news. I built it so you don't have to figure this out alone. And if this made you look at your own house a little differently, subscribe, because the next one follows this thread straight into what they're building on top of these rails, and you're going to want to see it coming. I'm Tim. Wherever the truth lands, and it keeps landing on Bitcoin, the one asset with no issuer. I'll see you in the next one.